Hi, welcome to the market view for the 22nd of January 2014. Starting off with the daily chart this morning, we're going to have a look and see what the market did yesterday. And we can see the market moved higher, trading up to the 164 area, just in between 164.50 and this high here. We've got the 165 psychological area. Why is this important? Very simply because if you look to the left there, we can see, let me just widen this out for you. We can see that we've got a sell-off once the market went through the 165. So 165 is in this area, and then we see the market moving to the downside there, coming back down towards the 162, well, it's 163 area actually. So watch this. If the market puts in any sort of buy signals in this area today, the market will need to drive through this area if it's to continue higher to overcome the resistance to the left. So just keep that in mind. Let's move on and have a look at the 30-minute chart from yesterday. I'll just spread the bars out a bit there as well. Let me just cancel that, and I'm just going to mark up the trade. There are some important points here that I want to bring to your attention as well, so let's just make a bit more screen space there. So the market traded through the DP after recording the overview or market view yesterday, and we can see that when it traded through the DP, we had a huge increase in volume, and this brought the market back. I've spoken about this before, where you get red candles coming off the lows with very high volume, followed by green bar, buying, bit of weakness coming in there because we're at the DP level. And then we see the market drive through with an increase in volume there as well on this particular bar. It then starts to drop off, and as the market puts in a sell signal, the market closes below the DP. The problem we have here is that the entry price is at the 164 area. So we're at a psychological area for an entry price, and psychological areas take some getting through. The question is, should I take the trade? Well, the answer is yes, because we don't know what the market's going to do. It could sell off for 100 points. You know, there could be some adverse news out. So if we take the trade, then what we need to do is to find a way to reduce this potential 38-point loss significantly. And I'm going to show you how you can do that in this video. Also, keep in mind that where I've got the low from the previous day, which is a support area as well. We saw the market trade down to this area yesterday, or the day before, I should say. This again down at the 164 area, which was the DP. So I'm just going to bring this together a bit so you can actually see it on the same line. So there you go, you've got that 164 there. So these are just basic things. It's just looking out for psychological support and the like. So let me just bring this over. Now, what's interesting here, and I'm just going to spread this out for you as well. Now, if we come down to this particular bar that went through the entry price and then traded back off the lows, this is something that I spoke about earlier. If the market comes off the lows of a price bar, in particular a red one, of course, because the market's thrown down the market, it's been forced down and then it's come back up. Now, if you get a red and a green candle, it's an interesting price bar, because you've got this sort of the market saying it's selling, but then you've got the green buying. So have a look out for these types of price bars. They are very interesting. That's all I'm going to say on these at the moment. If you want to see the opposite, you've got a green bar with a red candle. So the market's trying to move higher, and then you've got this red volume. So that's sort of alerting you to the fact that there is some sort of selling coming into the market. And this is the opposite, and we see the market starting to move higher. So how can we use this information in order to mitigate the 38-point potential loss that we have? Well, the trick that I use for this is the markup tool, and I'm going to go to annotations, and I'm going to click on the extend right. And these extensions can be set to whatever you want, which can be set up in the settings area. to show you where this is, extensions, and then you can change them to whatever you want. and then you can actually apply them. So this is where you will actually change the extension percentages. So coming back, I'm just going to left click on this one. We're going to mark up a single one. I'm going to click on 50%, and I'm just going to click on this. And then if the market closes back above this 50%, this is something that I've discovered from years of trading. Let me just delete this one. If the market closes back above the 50%, generally it will go in the opposite direction, and I can use this information then to reduce the potential loss that I have. So instead of being stopped out at 64.42, I'll be stopped out at 64.25. So you can see they're reducing the potential loss by over 15 points or more. So that's something to keep in mind as well. Also, here you've got a situation where the market is closing back above the DP as well. So closing back above the DP indicates that the market is likely to change direction. Now I'm assuming this is a news item that wasn't actually forecast for yesterday. I wasn't at the screen at the time, but I hear on the radio news that there was some sort of announcement which was that impressive. I can't even remember it now. But anyway, I know what it was. It was that the IMF had said that it changed the growth figures for the UK, and Osborne had been vindicated. I don't buy any of it, but I'm not going to go into why in this particular video. So that changed the direction of the market. So what started out as a really good potential trade, by using what I've just shown you, you could have actually reduced the potential loss on this trade, because when you get red candles coming off the lows with green bars, generally that's going to be a buy, or the market's changing direction. And then the opposite is that you get red volume with a green candle, and we'll see the market pull back there as well. And then you see the market coming off the lows again there with this increase in volume. So when the market got to the top, whilst we're talking about volume, you see it traded up to the R2. Have a look at the volume. It's now greater than the previous bar, yet the range of the bar is less. So if you were to think of this in car terms, you've driven this far and used this much energy, and then all of a sudden you can only travel this sort of distance and you're using a lot more energy. So it's a bit like trying to push a car on ice when your feet are losing grip and you're just not making the same distance, and eventually the car starts to pull back towards you because it's too slippy. So that's the best analogy I can give you with that. So the market's using far more energy coming back, and then you can see there it's just sat and traded in this range on the overnight, and the moment's still stuck in a sideways range there. Also, we know this is selling because the market's moved higher and the volume has increased. So the new buying is being met by the pros selling out at the R2 level. Anyway, that's it for now. I'm trying to keep these short. We're up to 8 minutes. A bit too long, really, just to give you a quick view, but I thought I'd just throw in a few tidbits there for you as well. That's it for today. I will see you in tomorrow's market view. Have a great day. Oh, just before we close, let's just have a quick look, see what news we got out today as well, just so I can give you a heads up. We've got, yes, we have indeed. We've got the asset purchase facility from the UK votes and the official bank rate votes. This will be an interesting one. Not that the interest rates are going to rise at the moment. Carney has said that they're not going to, but you just never know. So it'll be interesting to see how they actually voted last month with regard to rates. So it's probably one that you don't want to be in the market with when that one comes out. Anything to do with interest rates, and you certainly don't want to be out with the unemployment rate. I have no doubts, based on the manipulation in the market at the moment, that we're going to see a better figure for the unemployment rate. I'd be very surprised, and in particular the part-time jobs that were created prior to Christmas as well. So keep this in mind as well. One you don't want to be in the market for. And there's the one, the claimant count change. It will be the one that I'm actually talking about. So watch out for the percentage change in unemployment and also the claimant count change. It used to be called the unemployment rate, as being changed for the last few years. Right, that's definitely it now. As ever, thanks for watching. Have a great day, and I will see you tomorrow.